There's a very wide disparity in expectation and interpretation of what's going on.
I think there is a great dispersion in expectation out of the second quarter GDP, but I don't think there is a great deal of dispersion about what the Fed will be doing for the rest of the year. We expect another 100 basis points of rate hike. I think the market expects a little less than that. Some people are a little more hawkish. They expect a little more than that. But by and large, the Fed will go well past what we call the neutral rate and hang in there till they're comfortable with the inflation outlook. Now, being comfortable with the inflation outlook doesn't mean inflation falling back to 2%, because I think even Fed, particularly the San Francisco Fed's analysis, showed that a large part of the inflation is being driven by supply-side factors. I think what the Fed needs is the demand-side factors to dissipate. And if that were to happen, wages, jobs, production, and so on were to soften, then the Fed, I think, would be in a position to pause at the end of this year or early next year, even if headline inflation for 2023 seems to be in the 3-4% range.
You're right. There is not really much dispersion between the expectations until the end of this year. But what about next year? Because the Fed's own analysis suggests that they're going to keep going until the end of 2023, at least at a much higher rate than the market's expecting from that level. And if that inflation comes off to a certain extent and it turns the corner, that doesn't mean it's going to keep going down. And if we see continued expectation through 2023, continued inflation through 2023, how are they going to hit that 2% target?
I don't think the Fed is in any position to be confident about hitting the 2% target in the next 18 months. It's just not going to happen, especially if so many supply-side factors remain live through 2023. And by that, I mean what is happening to energy prices. The issue is in Europe, but that affects energy prices worldwide. It also depends on what's happening to food prices. It's not an issue in the U.S., but it affects grain prices in the U.S. if there are adverse developments out of Ukraine. And therefore, supply-side inflation is very likely to remain elevated all through 2023, which has adverse implications for the world economy, maybe not as much for the U.S. as many other commodity-dependent economies are. But at the same time, it will also mean that the Fed will not be able to find any respite as far as inflation is concerned. Now, that doesn't mean they'll keep on hiking. I think they will keep rates elevated. The market's pricing that they'll be pushed into a corner to cut rates next year. I think that's where our disagreement comes in. I don't think the Fed is cutting next year.